Here's a story I'm sure you're all familiar with. You've got an investor, he hears about a market popping and he thinks, I missed the boat, should have invested. And then a few days later, he hears about the market continuing to pop and he thinks, crikey, I better get in there. All of my mates are getting in there, I need to get in there as well. And then the market collapses. But the story we're going to tell in this video is what the best investors do. What they do is counterintuitive. It goes against our very base human instinct and nature. And even after, this sounds crazy, even after you guys watching this video, most of you won't actually do this. And at the end of this video, after sharing with you what the best investors game plan is, I'll apply that and I will share with you the sector that I believe is currently unloved, under the radar and ripe for investment. As always, folks, remember this is not financial advice. We make these videos for entertainment and educational purposes only. As ever, your capital is at risk when you're investing. Let's begin. Take a look at this graph of the Nasdaq Composite Index, an index that is heavily weighted towards tech stocks. As you can see, this is a story of the last few decades, and you can see big spikes up, and then you can see falls, and then you can see the spikes going up again. And I can pretty much guarantee you that the amateur investors, they invested towards the peak, and then they nursed their losses all the way down the trough, and then sometimes they ended up selling at the trough as well. So they literally booked a massive loss. The trick, of course, folks, is to buy when it's flatlining, is to buy when the market has dipped, because then you're going to be buying cheap and then eventually you'll be able to sell at a high price. Now, I know this sounds really obvious and easy to do, but actually it's really psychologically hard, because you see, as human beings, we are wired as herd animals. We like following the crowd. We like following momentum. We don't want to be Billy No Mates, the person who's going against the tide. But this strategy demands exactly that. Let me put it another way. What we don't like is if we see a ship burning and we see all of the people, the crews jumping off the edges of the ship, the rats are fleeing the ship as well, and we think, aha, that ship is now undervalued, let me invest in that ship. We don't do that. And you know what? There's very good reasons for that as well, because most ships that are on fire will ultimately just disintegrate and become completely unsalvageable, sink, and that's the end of that. Ibrahim, you're speaking in riddles. Just tell me what I'm supposed to do. So what you should actually do is wait until the ship is just a smoking ruin, and you can go up to it on a dinghy boat, look around it and figure out if it is salvageable or not, if it is investable or not. And then in the cold, hard light of day, you make an investment decision based on data. You should also be well informed about the market and the industry that you're investing into. So you should know about what the demand and supply for ships is like and what's going on in the shipping industry right now. You should also be aware of the wider macro trends of the supply, the imports and the exports industry, and where that is as a whole, because of course that then affects the shipping industry as well. And then the final thing is do the maths. Look at how much is this ship actually worth in the market if it was fully done up. How much will it cost me to actually do up this ship, and how much can I buy it for right now? And if you can see a bit of a profit between how much you're going to have to spend on the ship and then how much you can sell it for, then that's game on. So now, taking the ship analogy and applying it to the stock market or investments in general, firstly, typically try and avoid frothy markets. Wait until the dust has settled, until everyone's gone away, all of the good and bad hype has gone away, and the price is much more reasonable. Number two, research the industry and the market overall and understand where the big trends are going. And then number three, make sure you actually do the maths. Is this company, might be in a great sector, might be a great opportunity, but is this company actually got the unit economics, and does its business model make sense for the long term? Because if the math doesn't add up, then you can't invest. So folks, we've now worked out what the best investors game plan is when it comes to the psychology and timing of their investments. Now let's try and apply this and figure out what investments we should actually be making right now. In order for us to narrow down the investment areas that we want to focus on, let's first take a step back and identify the mega trends that we're going to be riding to deliver our investment ideas. And I've done a video on this previously here that you can watch about the mega trends that we're focused on for 2024. But in this video, I want to double click on just one of those mega trends, artificial intelligence. Now, we all know that artificial intelligence is big, but the question is it enormous? Is it big like crypto? crypto is and was big, or is it big like the internet? Now, in my humble opinion, I believe that artificial intelligence is seismic and disruptive and transformative in the same way that the internet, mobile technology, and cloud computing has been over the last 2 or 3 decades. Mark Andreessen is a very celebrated venture capitalist. He's got a fund called Andreessen Horowitz, who we've actually co-invested with on some companies a number of times, including some AI companies actually. He says this: just like the microchip brought the marginal cost of compute to zero and the internet brought the marginal cost of distribution to zero, generative AI promises to bring the marginal cost of creation to zero. Because you see, every so often you have big technology shifts that completely upend the way that the world is. It changes things so dramatically that entire new industries are born. Remember the internet. Before the internet, people didn't go online. The internet gave birth to Google, Amazon. Emails weren't really a thing before the internet came about. How crazy is that? Remember the mobile phone revolution, where we could now actually carry a mobile phone in our hands around with us all the time. People who are perhaps too young for this would remember the Nokia 3310. You could barely do anything on that phone. But with phones in our hand, we can do all sorts of things. And that's given birth to companies like Airbnb, Uber, Lyft, DoorDash, Venmo, mobile banking, and the list goes on and on. And remember the cloud computing shift. This is not one of those that's obvious, because if you're not a business, you won't be even aware of this. But the cloud computing shift enabled companies like Netflix, Salesforce, Spotify. It enabled Microsoft to switch to a subscription model. It enabled Dropbox, Google Drive, and Twilio, amongst many others. In absolutely the same way, artificial intelligence is expected to completely transform entire industries, because you can now replace the creativity, you can replace someone doing a process with a computer that can do it much more accurately and far quicker. That is a very, very scary, but also incredibly promising prospect. It's a fair question, but let's have a look at this chart. As we can see, folks, AI is literally just starting. It has so much more room to grow into. I mean, just take a look at this clip of Sal Khan.
So we're curious about how good it might be at tutoring someone in math on Khan Academy. So
please, side AC is called the adjacent side. He did a great job identifying the sides and using the sine formula.
Wow. I mean, that is going to replace teachers. That is going to fundamentally change how we think about education, how we think about where we go to get education, the role of a teacher and the role of a student, why we get educated in the first place. These are all now, for the first time in centuries, open questions. And folks, this is the mic drop moment of this video. You know the mad thing about everything that we've just been saying? No one has clocked it yet. Even among the early adopters of technologies, people who are between the ages of 18 and 29, we are way under 50% in terms of usage of AI. And this is just talking about very technologically advanced countries like America. Even there, the penetration is low. Many people, when surveyed, have said they've not used AI at all and are unsure whether they have or not. And in another survey, AI still lags behind as revolutionary compared to mobile phones and the internet. So folks, without doing very much work at all, we have identified pretty solidly a few things. AI is big and it's going to become enormous. AI will disrupt everything, and crucially, not many people know about it yet. So now the big question comes up: how are we as savvy investors going to take advantage of what we have just learned? Okay folks, there is still a lot of potential in the public markets by investing in companies that are at the forefront of this AI race. So companies like Microsoft and Google and Meta and Facebook, Nvidia, Taiwan Semiconductor Technology, and others like that. But as this graph shows of the Nasdaq Composite Index, people have kind of clocked that this is a thing and they are investing in it, and there's a bit of a bull market going on around these AI companies. But you know what folks? The real returns when it comes to investing in technology is going early in the innovation cycle by investing in early stage startups. Venture capital is the bit before the graph even starts. It's so much of a flat line, it's not even there. It's the under the radar industry where it really does matter about who you know and what you hear on the grapevine, and if you can track down those really hidden rough diamonds. It's the industry where enormous successes are birthed, and also you can have some complete failures as well. Now, we've been investing in venture capital through the Curate VC fund fund for several years now. Alhamdulillah, we've had a few exits successfully as well. And like many VCs who are in the know, we and they have been investing in AI long before it became popular. Side note, folks, you should definitely check out our fund at curate.capital. It's averaging 23% plus annualized returns, and it is, to our knowledge, the only sharia-compliant VC fund operating in all of Europe. And if you're a UK investor, then it comes with some very sweet tax incentives as well. Now, back to the AI story. We invested in a company a few years ago that was very interesting in the education space. And now, very recently, as of a few months ago, Sam Altman and OpenAI are investors in this company because they saw the promise. The point I'm making is it's not about jumping on the bandwagon now, it's about jumping in the bandwagon early. Now, in terms of the best way to invest in venture capital, it is, in my humble opinion, through a fund rather than doing individual startups. And the reason for that is because you will significantly de-risk the risk of duds, and there will be many duds in venture capital. You will significantly reduce your risk of losses by spreading your bets across 20, 25, 30 companies that a typical fund would give you exposure to. And in venture capital, investing with a quality fund manager is actually really value additive, unlike in public equities, where it's actually common knowledge and a bit of a joke that an expert fund manager usually will underperform the passive ETFs that you could have just invested in for very, very low fees. But in the venture world, that's not the case, because a fund manager in VC comes with his black book and the ability to due diligence deals at the very early stage where there really isn't as much data around. So you really are relying on a quality nose, on a quality fund manager, ideally with track record. I would definitely recommend not DIYing it unless you have access to really, really strong deal flow. For example, you're a very senior person in the Google Innovation Labs or something. And Crowdcube doesn't count, by the way, folks, because anyone can get access to that stuff. There is a great deal of portfolio mathematics around what I've just said. I'm not going to belabor the point here, but I'm going to point you to a completely free venture investing course that we made with some of the leading lights of the venture industry that you can access completely free and easily at ultimatestartupcourse.com. So folks, the bottom line is venture capital is an industry where you can make crazy returns, anywhere ranging between 10x, sometimes up to 1000x on your investments. No other industry offers that, but in order for you to get exposure to that in a way that is reliable and relatively safe, I would recommend that you think about doing it through venture funds. If you're asking this question, so where have you been for the rest of this video? The whole point of this video is that we are going to invest in unloved, unfrothy, slightly backwater areas that are being overlooked by the market right now and by the newspapers and journalists right now. Investors are not journalists. Journalists buy into hype, and that is not where investors focus. We create the hype, but it takes about 2 years to get there. And look, the VC market went through a pretty brutal and necessary correction over the last 18 months or so, particularly at the latest stages. We've always been at the early stages, and frankly, it hasn't been too crazy even at the peak in the early stages. But now the market has corrected, and the signs are now that this ship that has now emerged, a little bit damaged, a little bit burnt, is actually pretty decent and has a lot of promise to offer very affordable prices. So valuations are pretty reasonable, and talent is plentiful because there's been some mass layoffs from the larger tech giants. And as a result, there are a lot more entrepreneurs and there's a lot more cheap talent available for startups to snap up and take advantage of. And the public markets, like we've mentioned, are booming, particularly when it comes to the tech sector. And this is actually a really important signal. It's almost the signal that indicates that venture capital is now going to come back into the vogue. Because of course, where do venture capital backed companies exit to? The IPO. And we've had some very successful IPOs like Reddit, which was a VC backed company, Kaspi.kz, Astera, which is an AI company, have done very, very well. And so that gives a signal to all venture capitalists that actually, guys, we think we can get this exited at a good multiple and make a profit. So now let's start investing in these companies as well. And if we actually look at the data, Q4 2023 saw an 11% quarter-on-quarter increase in deal value, which is indicating that venture capital funds are now steadily getting back into the groove of deploying and making investments. And in Europe in particular, we saw a 28% quarter-on-quarter increase in Q3 2023, which is pointing towards a European market that is also now steadily recovering. So now let's wrap it all together, folks, what we have learned in this video. First, invest when other people are too fearful to invest. Invest after understanding properly the macro and the micro of the industry and sector that you are investing into, and invest based on the maths. Make sure it stacks up. And right now, my dear brothers and sisters, I believe that AI is a big mega theme that has a lot more juice to give. And of course, AI is not a big secret. We can see it reflected in the public markets and the newspapers. But what I'm saying is, look at where the puck is headed and look at where the real value lies when it comes to investing in AI. And that, in my humble opinion, is the venture capital industry. That's it for today, folks. I hope you found that helpful. I'd love to hear your venture stories in the comments below. Make sure that you check out the Curate Venture Capital EIS Fund if you are into Sharia compliant investing. Until next time, Assalamu alaikum.